CPA Chris Gamble from RDG and Partners is back with us. Chris, good to see you. Welcome.
Thank you. Thanks for having me.
All right, our topic is a hot one for the end of the year, charitable donations. A lot of people will ramp up their donations before December 31st. Let's start with some general rules when it comes to charitable donations and what you can deduct on your taxes.
Yep, there are a bunch of rules with regard to charitable donations. The first is a charitable donation is a gift of money or property. It could be a stock or a bond or a vehicle, or expenses you might incur while performing a service for a qualified organization. Now that's important too. Not all tax-exempt organizations that you donate to produce a charitable deduction. However, the IRS on their website has a database that you can search and confirm that you will get a deduction if you donate to that organization.
Is there a limitation in terms of how much one can deduct?
Yes, there are limitations. In general, you can deduct 60% of your adjusted gross income as a charitable deduction. If you donate more than that, it will carry forward for 5 years, and you can use that up in a subsequent year.
Okay, so I would say keep good records, and let's talk about record keeping as it relates to these types of donations.
Right, of course, very important. As with anything on your taxes, you really need to be able to substantiate the deductions you claim. So with regard to charitable donations, you want to have a record that would indicate the type of donation, the date you gave it, the amount, the organization you gave it to.
Let's talk about just sort of the planning that you would associate with this, the types of things you should be thinking about before even making one.
Right. Some of the more popular strategies are, first you need to understand that the charitable deduction is part of your itemized deductions, and you need to compare that to the standard deduction, because you're going to deduct whichever one is larger. So if you're claiming the standard, you will not get the tax deduction. As part of that, you may want to consider bunching your deductions. If your itemized and your standard are close, you might want to double up in 1 year so that you can get the higher itemized in year 1, maybe get the standard in year 2, and then year 3 you double up again. So that's a good strategy. If you are over age 70 and a half and you're taking required minimum distributions from your IRA, you can donate those dollars directly to charity, and then you will not have to include that amount in income, which can help with other items that may be limited by your income amount. And then lastly, I'd say if you're considering a larger donation, a donor-advised fund is an option. And what that entails is you'd make a large contribution into this account. You get a deduction the year you make that contribution, but you don't have to pick the charities you're going to disperse it to until following years.
Okay. That's good. That's new in this segment. Final thoughts on this before we let you go.
Yeah, I mean, just to recap, really make sure the organization you're giving the donation to is allowed to deduct it on your taxes. Keep good records. If you have any questions, contact your tax advisor, your tax preparer, so that you can coordinate things to get the most benefit out of your charitable giving.
All right, we'll leave it there. Chris, thank you. Appreciate it.
Thank you.
If you missed any of our conversation, as always, we will share it on our site. You'll find it at rochesterfirst.com.